All right. Boy, do I have something interesting to show to you today. So, I was going to do a video, a 3-week recap of all the stuff that I've learned to help people learn new things, but I've found something really, really interesting. And admittedly, I've only been doing this for 3 weeks, but I think this is a damn good pattern that nobody is looking at right now. So, I was trading today around 10 o'clock, 10:30, a ticker popped up on my scanner called RLOG, and it was up to 100% within an hour of market open, over 100%. And I started looking at it. I'm like, why is this stock taking off? It's a 23-cent stock. It's a shit company. There's hasn't been any news on it for over a week. Why is this thing taking off? And if you look at the 15-day, it's been a downtrend constantly. Like, what's going on? Why is this happening? And it was already up to like over a couple million shares, and it's only got, you can see here, it only has 18 million shares outstanding, and it's traded over 21 million for the entire day, and it's only 2 o'clock right now, so it's traded over its own volume and shares. So I'm like, what is going on? Why is this stock taking off? So I started to look around, and I started to look up news for it, and there was no news anywhere. And I randomly ran across a video yesterday of what's called short share restriction, which is this alternate uptick rule is designated to restrict short selling from a further drive down the price of a stock that drops 10% in one day. And if you take a look, ROG on the 3-day, from here to here, is right at 10%. So this thing is just a steady decline right at 10%, which means it triggered the short sell restriction. And if I go here to this little site here, if I scroll down, ROLG, this is all the tickers for today, July 14th, that are on short sell restriction. What is short sell restriction? It basically limits short sellers from getting into a stock and making it plummet. It's designed to stop a stock market crash in the event of, it was actually implemented in 1938, which was after the Great Depression, which was caused by a massive short selling, I think. So what this does is no stock can be traded if it drops below 10% from the last day's close. What the restriction does is it creates what's called the uptick rule. This means a stock can only be shorted on the national best bid and offer. What is the national best bid and offer? Well, I suggest you learn level 2. Level 2s are really useful for seeing the moment-to-moment trades and where a stock is going to be going and how much resistance it might have. But the quick and dirty is, this right here is the best bid currently. This is the best ask, so it's over almost 10 cents above. So what national best bid is a short seller cannot sell a stock unless it's on an uptick, unless it's going up, and it has to be at the best bid. So if you have a stock that's got a high slippage, maybe a few cents on a penny stock, none of the short sellers can sell up here. They have to meet the bid, which means the bid's going to go up. So it's a restriction designed to make a stock go up and not keep dropping down. So this stock is going up because it's in favor of the bulls. This pattern, it went up 150% because short sellers can't sell it unless it's at the bid. And as people come in and buy more and more, it's just going to go up. And eventually, the buyers here start to sell off. They start to capture their profits, and then the short sellers slowly take over. But you can see the stock is way overextended. It blew past 5 or 6 days of resistance. You get resistance here, resistance here, resistance here, resistance here, even resistance way back 15 days. It goes through it like it's nothing, like they're not even there. And so what's happening, you can see on the 15-minute chart, it's just the buyers skyrocket the price, and then they start selling out and they get their profits. And there's short sellers that are coming in, buying at the national best bid because they know it's going to go down tomorrow. But this type of pattern is perfect for a bull. It's perfect for making a ton of money. If you put in, I have $2,000 in my account right now, which I haven't traded yet. But if I bought $2,000 worth of stocks at 25 cents a share, that's 8,000 shares. It went up 158%, 160%. That would have been over $10,000 profit. Yeah. If I had put in $5,000, I would have made over $40,000 on this trade. And it's a really good pattern because it's in favor of the bulls. I don't know. I just thought that's really cool. And as soon as I figured this out, I immediately built a scanner to try to find these. And this is the scanner that I'm currently using. It looks for stocks 10 cents to 75 cents because I want a low cap stock to do this. It's more volatility and higher probability of it taking off. And volume of 5,000 or more. This is going to be a post-market scanner. So when the market ends today, I'm going to scan for stocks. And, well, let me go through this more. Shares under 30,000 because you want low float, so it's really high volatility and it takes off. ROLG is 18 million shares. It's traded 21 million for the day. I think it was at like 15 million by the time it hit its high, which is insane. That's 80-90% of the total shares. But anyways, back to the scanner. Price change, the close is at least 10% less than 1 bar ago in the day. So it looks back one day, the close of the day is 10% or lower, and that's going to trigger the PDT rule for the next day. So today is Friday, July 14th. Monday, I'm going to check that SEC website, again, right here, and if I see GBSN, which is a IPO that I think just opened, but it's flagpoling and it's got good volume. It's a 1.9 million share float, which is low. It's already traded half its volume today. So if this stock it's at 16% negative right now, so it's going to trigger this SSR restriction for Monday. And if the volume picks up, it's only going to go up. Now, correct me if I'm wrong, if you're a day trader and you know this better. I do know that I don't know if trading companies outside of America are subject to the SEC rule, because brokers like SureTrader, which are located in the Bahamas, they're exempt from the SEC rule of PDT, the PDT or the pattern day trader rule. So I'm going to guess that certain brokers are exempt from this, but any broker in America or any broker that follows the PDT rule can't short sell this stock in the NASDAQ. The reason I'm making this video is because the more people that see this and the more people that understand the pattern, the more people are going to start buying into these stocks that see this. You are going to start scanning for this, and the more people that see it, the more people are going to buy in. It's heavily favored for the bulls, so it's a really good chance that the bulls are going to take it over. If you're watching this in a short seller, it would be a bad idea to buy into one of these stocks. And now that I actually look at this is an OTC stock. No, the ORLG is not it's a NASDAQ stock. Maybe Monday this won't work because I can't trade OTC stocks. I'm using Robinhood, so this is out of my range. But I'm going to be tweaking and using this scanner to try to find these stocks as much as I can. All of these are OTC. But yeah, that's the perfect storm. A NASDAQ stock that is coming down off of a 15 slope. It's just barely touched 10% negative, and it triggers the SSR rule. And if the volume takes off, it takes off. I wish I had more patterns or charts to kind of find these and show it to you, but I don't know, just tell me what you think. I think this is pretty cool. All right as I turned off the camera, a stock just popped up that's on the NASDAQ. DCIX. It's at 50 cents. It just dropped below the 10 cent or 10% close. So this is the close right here of the last day. It's right there. It's at 8.95 right now, but if it closes 10, and you can see the 15-day, almost the exact same setup as ROLG, almost exactly the same. So if it closes 10% low, it's going to trigger, and tomorrow or Monday is going to be an interesting day. I'm so glad I found this.